What's up, everybody? Try to wait for some more people to get in, but you know, we all know I'm not a fucking furu. I'm not gonna have 38 million people watching me, unfortunately. But that's okay. That's okay. Just kind of gonna go over a little bit of what I'm seeing and kind of go over why it's extra tricky right now, and then do a little bit of a forecast for what I think is to come. We'll go over both the bear and the bull scenarios. But yeah, as always, if you're not in the chart analysis, there's a 7-day free trial link in the description. Shit, you get access to a real cool indicator, this range point indicator. Boom. You want your range points here? You don't want them here? Whatever. Once I feel a lot more confident with the algo that I've been developing, I won't give y'all access to it, but I will have the algo signals sent as signals automatically as well. So there's a whole bunch of new goodies coming to y'all. But the range point is the newest thing that I've implemented. You guys know we use those pretty heavily, and now you don't have to even fucking mark them. You just use the range point indicator, and it fucking puts them on there for you. But yeah, guys, jumping right into it. First bit of tricky business is the fact that from our lower high to our low, we bounced off of 78% amazingly, right? Also, you can say, right there we have a bit of support resistance, same fucking thing. All right, so that was the first thing that I didn't really like to see for this week. I would have liked if we would have came up a bit higher, towards the middle of that. It would have presented itself a better bullish case. And then right after that, from your lows to your highs, you did the exact same fucking thing. Tap 78. But like, there's nothing major, right? This is just generic and basic sideways price action, right? There's nothing crazy, but it doesn't really help it doesn't really help you to develop a bias, right? Now we are coming off of a very big sell-off, right? And it's similar to the prior sell-off we had over here, right? So obviously we all know we had that massive push up, massive correction, and then a little bit of sideways. And honestly, this one was a lot quicker. um, but you got to do keep in mind there wasn't any sort of oil crisis back then. Oil is the reason why gold is stuck, and it is also the reason why gold sold off so hard, right? When there's an oil shortage and high oil prices, that puts the concern to the inflationary period that we could be entering, right? That's going to boost up the dollar. That's going to boost up, the 10-year yields. Those are not good things for gold bulls. Now, once that gets resolved, we should be en route to 6,000, right? But that could be tomorrow or that could be in 2 months. We don't really know. Now, one thing I did notice the other day, where was it? I believe. Now, this doesn't really matter too much, but from your low to your high, you have $1,323, right? Now, from your high to your low, you have $1,321. So you can't tell me that's random. So I do think that's a very good place for the market to stop right now and at least give us a bit of bullish pullback, right? And then the shortest fib I would use would be from these lower highs to these lows, right? So I would be targeting obviously 50, 61, or 78. And then you can also argue that you might as well just use the overall lower high, which puts your coordinates up just a little bit higher. So in terms of bullish, that is what I would be targeting, and the not really the reasoning behind it, but one of the main drivers behind it is this move needs to get pulled back if they want to go lower, right? Unless there's some new news that can just overpower everything and dump us down, we're gonna want to pull that back, and we're gonna need to pull that back to continue down lower. Um, even here with this massive sell-off, you had to pull back to try and go lower, and obviously you weren't ready, and then the whole Iran shit happened, and it just kind of threw everybody off of their agenda. In addition to that, right? Look at that fib one more time. We have that fresh daily EMA cross, which honestly we haven't had a daily one in a good amount of time. We had one over here. Where is it? I think the last one we had was kind of just bullshit too. Over here we had a bullshit cross and it just instantly got fixed. But a good bear cross where we stayed bear for a while, hasn't happened since 2023, right? And if you take a look at what happened, when you broke lower from your high to your low, you ended up coming back to your fib and to retest the EMAs. It wasn't a perfect retest, don't get me wrong. Like, we closed back above them and then we came back below and then we broke even lower, right? But overall, all I really use the EMAs for is that dynamic support and resistance, and to help with the trend direction. So that is, the first major thing that has us thinking bearish. In addition to the fact that we made a lower low, and the oil shit, you really want your EMAs to all match. And right now, they're telling us that we should probably be trying to sell. Right here, we have, I think, everything except for 15 is bearish right now. We tried to go bull here, and they didn't have no follow through. 15 is bullish as of right now, but 15 minutes, it's a lot more reactive. You'll see flips on them all the time. Uh, but yeah. So going back to 4 hour to get back into it. So as I was saying, from our lows to our highs, we have that 78 rejection. Not really the best thing that we wanted to see, because I would have preferred it just broke down lower, so we could have, if it would have broke, if we would have came down lower and either broke these lows or came close to them, we could have. It would have been easier for me to say, all right, well, let's really look to sell. Um, but when there's sideways movement and you don't really have that big of an edge, and you're honestly just unsure, just wait, right? Just because you're a good trader doesn't mean you're always going to understand what's going on, right? Let's take a look at where the current bearish fib is and where we are in relation to that. So we've been kind of respecting this 50 zone. So once again, you can argue maybe we want to go down from here. We are still respecting that 21 EMA, which, as I say, they like to use that as a dynamic support and resistance. Keep in mind, though, you can come all the way to 50, and at the end of the day, you can break above it, and it's not a problem, right? It just could be a trend flip down to the hourly. This is where things get a little bit easier for trying to get in some trades. Obviously, the higher time frames right now are a little bit mixed. But here on hourly, you can kind of see a few things. So one, the biggest bearish confirmation is going to be breaking that low, right? You break that low, you're likely going to bounce off of this, which I believe is 61, maybe. Yeah, 61, right? And then 78 marked as well. So if we do break that low, we'll likely get a reaction from around that level. That's where you would look for your pullback and your continuation, right? Then you can go off of the current lows that we have right now. That, if it's support right now, it would be turn resistance. And you can see we have respect for that same area in the past, right? Now for buys, it's basically just the opposite. We have a decent lower high established here. So if we are able to break above that, right, where are we going to travel then? The first place we're going to want to travel is going to be the next closest fib, right? So that would be about your 61, and I could see it being a pretty volume filled break, right? We've been here for almost 2 days, so there's a lot of liquidity there. So I would look for that push up somewhere 78, 61. Don't really know. I wouldn't get in on the breakout, but I would look for that pullback, that retest, and that resumption, right? Because this is all internal structure. So if we break the high, even then you can say this line kind of going backwards, but you could say that if you break here, you're gonna come and try to attack this low, so you could possibly have the same kind of thing here with a break, a retest, and a resumption down, right? But if we do break these internal lower highs, we will try to attack higher prices, which is good, because then, right, for me, I have said to you guys a lot of times, I don't really care if I don't get in the like when the trend flips. I don't really care if I don't get in the first or second or even third. In this case, higher low, right? So if we do flip to bullish, right? If this is a higher low and we go up, that would mean this was the first higher low, second, right? Third is when I would really say, okay, we've really clearly defined that we want to go a bit bullish. And most of the time after the second and third higher lows of a newly established trend, there's a lot more confidence in the charts and also in yourself. Like I said, if you're confused on what to do, that's okay, right? Sometimes if it's too easy, if you're like, oh my god, it's gonna go bear 100%, maybe you're missing some things, because at the end of the day, the big boys don't want it to be easy on you. So overall, that's what I'm waiting for. And at the end of the day, it is a Friday, so I might not even see anything that we're able to take in terms of a trade today. But I do think the weekly close will give us a good indication for what's to be expected next week. So if you go take a look at the weekly candle right now is printing a pretty good rejection candle, right? Very similar to this rejection candle over here, which came right after a rejection candle, right? 2 massive weeks. That's $1,000 of movement. Um, and if you're looking at things from a weekly point of view, the way I look at it is if you have your high here, where did these highs come from? Well, they came from here. So this is still bullish, right? We know that overall in the long term, like long term, months, it's still bullish, right? Daily and below, you really do got to start to argue that okay, obviously we're bearish. We hate being bearish on gold because it's gold, right? Um, and even then, it bounced off 78 from those lows to the high. Doesn't matter. But if we do close this nice rejection candle, that would tell me that it seems pretty likely that next week we're going to want to try and begin the pullback, to the upside, right? And then, as I've been telling everybody in the chart analysis, what's gonna let's see 78 what's gonna mean the difference between it being a pullback to continue lower or a being the low of the year or the low for this next leg up is what happens with oil and the Strait of Hormuz, right? If we get that under control and oil's flowing again and the oil shortage, oil crisis is resolved even temporarily, that will take a lot of the bearish pressure, if not all of the bearish pressure, off of gold, right? So what I'm trying to say is if we do get this push up and we're somewhere around either 50, 61, even 78, right? But there's no fix with the oil, then chances are you're going to end up rejecting and you might not make a new low, but then you would have a whole new fib to look at from your low to wherever your high is. And maybe you come towards 50 and maybe you start developing a very complex structure in anticipation of the oil shortage being resolved, right? Because at the end of the day, as much as we think we know about a certain scenario, the big boys, the people in charge of why gold does what it does and why the markets do what they do, they always are going to know a little bit more than us, right? So if the majority of the big boys are um, in alignment that they think, okay, based on what we know, this whole oil shortage should be getting cleared up in the next week, 2 weeks. They're gonna start positioning themselves for that, right? That's why sometimes you'll see a massive move, and it's like, what the fuck is that for? Well, that was the big boys positioning themselves ahead of time, right? So that's really what I'm looking for. I would love to see that nice, strong weekly close. If I had to say, I would I basically needed to close above this box, right? That's just a really rough support resistance from wick to wick and then just body straight through it. So if we close above there, I'm still willing to say that that is a good rejection candle. But if we do close below it, even though it might look like a rejection candle, it's kind of fighting with a pretty big support resistance. Um, so we really just have to see what happens, and then as I mentioned, going down on lower time frames, we can try to you know if price really does start moving and gets a breakout and somehow retests it before the market closes, maybe we'll be able to get active on it. But even then, right, we had this good bullish push from our 7 a.m. low to the high. We have $40, and in this single 15-minute fucking candle, we've already done 20, right? So as strong as the buys have been, the sells have been a lot stronger. Um, and right now for me, this is really just a no trade zone. I don't have an edge here. I don't have any clear directional indication. Even then, right? For instance, before all of this, I was looking to short, right? We were establishing lower lows. We have a high here and then a low here, and I was wanting price to come to 50 or 61 or 78 and reject. We came to 50, we rejected, but we did not make a new low, right? So that's just telling you there's a bunch of bullshit. You stayed there for a while. I mean, scalpers could have easily collected 1,000 pips here, but we didn't continue any lower, right? And that was at the end of the market, so I didn't even take a trade there. But that's what I was looking to do. But things change, and you have to adapt and evolve with the market. So there was just nothing I could do. Um, Only other thing I really want to point out right now is this fucking $178 15-minute candle. So this is 7 o'clock on Monday. 178, $187. That to me is clearly institutional buying, right? That's just the big boys loading up. You don't get a fucking 700 or $180 bullish candle at 7 in the morning for nothing, right? There's no news, no nothing happened. That's the big boys buying, right? Take a look at where your 50% of that is, and that's where this orange line, it looks too close. That's where this yellow line is, right? If what we're saying is that this candle is made because of institutional buying, like massive, but billions, maybe $1 trillion worth of buying, they're not really going to want to take that price too deep into it until they're ready to make things bearish, like very clearly bearish, hard push down, right? So if you take a look at 50% of it, half of the move, they're not going to want to be below that by a lot, right? And as you can see, we use that as very good support resistance, and even now, very good support resistance. So um, you can trade without knowing any of that, but that's just I like to have a very good. Hold on one second. Yes, I am. Go for it. Drive safe. Sorry. Um, I like to have a very good understanding of the market and why everything is doing what it's doing. So that's just something you can add into your little toolbox, right? And at the same time, that area that we just identified, the 50%, is in line with things that we put before we even looked at that, right? Because you never want, that little tiny thing, the midpoint of a massive move. You never want that to be your entire trading strategy. But if it makes sense with the fact that you have a range point there, that you defined a weekly support resistance, that you have lows there, and you're saying that, look, the further they get below it, where the majority of their positions are, the more likely they are to go bearish. Well, that's as simple as it is, right? Um, so yeah, I don't really have much more for you guys. I don't know, maybe some of y'all have questions or whatever, and if you do, now's your time to really ask those questions. If you don't have questions, that's fucking fine. We'll just end the live. But yeah, it has been a pretty slow past 2 weeks for me. I'm not gonna sit here and sugarcoat it. Um, when I don't have a solid edge, when I feel unconfident, I'm just not gonna trade, right? All I'm gonna be doing is taking entries that don't make sense. All I'm gonna be doing is, things that I don't need to be doing. Um, and really, ever since these lows were made, so I mean, only a week and it's the second week actually. Is it 23rd? No, that was this week. But yeah, this whole week has been kind of fucking crazy, and then even with the sell off, there was only for me, I think, three valid entry points, and I only was able to take one of them. The other two happened at times I wasn't trading. And that's just how it is sometimes. Unless you're literally going to be a gambler who's going to say price is falling, let me sell. There's not much you can do. Um, so yeah, I'm just gonna, like I said, reiterate myself one more time. I'm just gonna see what happens in this range. Um, if you do want to get a little bit eager, I guess you could say, if we do end up holding this low and making a new high, you could look for the same kind of thing, a little pullback scalp, right? Because I wouldn't gamble my life that we're gonna break the highs. But if you do establish a newer high from here, you can look for a pullback and a resumption, right? But you can say the same thing about the end, is that if you end up, you know, you come down more and then retest, you can look to sell here, right? But that's, to me, that's not really proper trading, so I probably would not take that. But anyways, like I said, I hope you guys had a wonderful week. I hope you guys learned a thing or two from this live. As always, hit the like button, hit the subscribe button, and hope you guys have